Hey guys, in today's video, I'll talk to you about volume growth and value growth, right? It might seem a very simple topic to learn and to understand, but trust me, it is one of the most important things that you will learn, which will help you to track any business and to understand their growth, right? Because see, when I track the companies, when you guys are tracking the company, I think one of the first numbers that we look at it is the sales growth, right? We want to know whether the sales of the company is growing or not, right? Through which we can understand, oh, if the company is doing well, are they going to grow more in future? If the company is stagnant or the sales are decreasing, right? So it indicates couple of things, right? It indicates that when the sales are increasing, it indicates that the company is gaining market share. In case if the sales are stagnant, that means they are stable and nothing much is happening. But in case if the sales are decreasing, that is a clear red sign that the company is losing its market share, right? And so, how does volume and value growth plays into it, right? See, any sale that for the company which increases, right? It comes either from volume growth or either from value growth or a combination of both. So let me give you an example, right? So let's say a company sold 100 pens for 1,000 rupees each in 2025. So their sales was almost 1 lakh rupees, right? Now, the same company sold 2,000 watches for the same price of 1,000 rupees. So the revenue that they made was around 2 lakh rupees. So they had a growth of 100% purely driven by volume because there was no changes in the price, nothing changed, everything remained stable. Only the company sold more products, which clearly tells that there is a demand for the company's product. Customers want it and they are ready to buy it, right? Now, let me give you an example of a value growth. If the same company sold 100 pens for 1,000 rupees last year and made a sale of 1 lakh rupees, now in this year, they sold same 100 pen, but for 1,200 rupees. So their sales increased to 1,20,000. So when we see in the revenue, we might say, oh, the prices have so the revenue has grown by 20%, so that means there's a demand for the product. But when we actually look deeper into the numbers, we see that compared to the last year, the sold amount of products, the only difference was that the prices increased from 1,000 to 1,200. Do you think that is sustainable? Personally, I don't think it is possible, right? Because even if you're buying a product, right, let's say last year they were charging you 100, right now they're charging you 120, and then they're trying to charge you 130. What you will do? You will just try to change to some other product. So only value growth is not sustainable at all, which clearly tells that there is no demand for the product. It's only the same customers who are repeating and buying those products again and again. So that is the reason why we need to understand where the sales growth is coming either from volume or from value. And personally, if you ask me, the best combination is volume and value, where a company has a demand for its products and they're able to sell more products. At the same time, they have the pricing power where they can increase the price of the product and people will still pay up for it. So let's take an example. I mean, I'll take you through the pen example only. As I told you, last year they sold 100 pens for 1,000 rupees each, made a sale of 1 lakh. Now this year they sold 1,500 pens for 1,100 rupees, right? Which clearly shows the sales increase as well as the value of the product increase. So they had a volume increase of close to around 50% and a value increase of close to around 10%, which combines up to around 60%. So this is the best combination. And whenever we are looking into the sales growth of a company, we need to look where the growth is coming from. And that is very helpful. So in that way, we understand whether there is a demand for the product, whether the company are doing all the right things to grow, or whether these numbers are one-off, right? And we need to understand one thing, that volume growth and value growth tells a story, right? So what does the volume growth tells you? Volume growth tells that the more customers are buying the product, the market share is increasing, the product is actually in demand, right? And the business is scalable. And I think if you personally ask me, I think I can give you the best example in this world right now is Apple, right? The demand for the product is crazy. More and more people want to buy, but at the same time, they have the pricing power. They can increase the prices of the product and people will still go ahead and buy it, right? And whenever we are tracking the sales number, right, what are the red flags to watch, right? In case if the value growth is high, but the volume is flat or negative, the company is continuously increasing the prices, but the volume is not growing at all. And the growth is coming only from inflation. So let's take an example. Last time, because the raw material prices was 10 rupees, you sold the product for 10 rupees. But this time the prices increased to 12 rupees. That's why you sold it for 12 rupees. Nothing else changed. The product demand remained the same. And the margins are falling even after increasing the prices. So those are the red flags that we need to watch. And whenever you're listening to the con call, right, the way the management speaks or the words that they use, that can really help us to understand what is actually driving the growth. Sometimes the management might not give the actual numbers or give the differentiation between value and volume growth. So let's look at what are the some terms that the management uses. So if management says growth is driven by volumes, this clearly is a very, very positive sign that the demand for the product is strong and the growth will remain. If the management says growth is driven by pricing, then we should be very cautious and neutral and need to wait and look, okay, how things are progressing before taking any further decision. But if the management says volumes are weak due to temporary issues, we need to be very, very careful and dig deeper and understand what is the reason. Is the issue temporary or is the company losing its market share? The demand for the products are falling. We need to understand that, right? That is very important. I mean, I can give you an example from history. Like we all remember Motorola, Nokia, right? Nokia, right? Even though they were the most famous products and the demand was there, but when the volume fell and the demand fell, the company just closed up the shop. No matter what the brand is, if the customers didn't demand it, the sales just fell down the drain, right? So that's why we need to be very careful. So, in short, what I want to tell you is like whenever you're looking into the sales growth of a company, always look deeper and understand where the growth is coming from. Is it coming from value? Is it coming from volume? Or is it coming from volume on value both? I hope this video was helpful and you learned something new today. If you like this video, please do subscribe to my channel. Thank you and God bless you.